Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the stocks that were in play today. These are the small caps. There have been lots of small caps running. They've been really hot lately. They've been pushing them hard. It's been impressive. You know, we keep thinking that they're going to hit resistance, and the stocks keep busting through and keep pushing higher. I mean, a lot of these stocks, like ticker symbol here AMDA, was under pressure for an extended period of time with very low volume, and then all of a sudden out of the blue, it's the best stock since since sliced bread, and it has 22,000 or 22 million shares traded today and closed up nearly 200%. Now keep in mind RSI's at Fasto's at 99 and RSI's at 79, so it is at overbought levels right now, and you do have plus DI really pushing here. So it's a frothy move. I mean, look at that candlestick, giant candlestick. We did alert this stock back here last week on this candle. I did post that. It was in a video, okay, from last Thursday, and so you could go back and check that out. And we put out the heads up because it had broken above the middle Bollinger Band and the 50-day simple moving average intraday, and that was a signal that it was heating up, and we were looking for a break above that middle Bollinger Band. That did happen today. It got above that 140 level, and then the big level to break was that 50-day simple moving average. When it broke above that today, it was really cooking. It ran up to the 100-day simple moving average at 236. On this last run back here, this really ugly black candle, it hit the 100-day simple moving average and pulled back. I know traders were locking in some gains at this level, but it did break above, and it ran up to that 200-day simple moving average resistance level. So now that's going to be the big level to break. If it can break above 313 tomorrow, look for a possible run up to the 300-day simple moving average at 357. Now if it struggles tomorrow with that 313 level and you see it pull back, what you want to see is that 100-day simple moving average at 236 hold. Today's candle did close well above the upper Bollinger Bands, and many times the candles will work back into the bands, similar to back here in January when there was a close above, it worked its way back. So if that does happen, you want to see that 100-day simple moving average hold. If you look here at the AMDA 15-minute chart, it was a really strong move at the open, and you could see it pulled back at that 11 o'clock hour, and people did lock in gains. It did come down, and it broke through that middle Bollinger Band, so it looked like the chart was breaking down, but it held this 220 support zone, that low of day intraday close, and it was able to break out above the top of this tight intraday channel. You can see all these candles formed a tight channel, and then when this candle here at 315 formed, breaking out above, that signal more upside. And so what we are looking for is a run back up to this high close level, and it needed to close above that level to signal more upside potential, and that's exactly what happened at the close. So this close above high close horizontal resistance in the 15-minute chart does signal more upside potential. So keep an eye on a possible run up to that 300-day simple moving average. The 300-day simple moving average for our strategy is the take profit zone. You know, the only way that you wouldn't want to take profits at the 300-day simple moving average is if there was a close above and it kept pushing higher. Many times when a stock starts from below the 50-day simple moving average and runs to the 50, 100, 200, and 300, that 300 signals the climax of the run. Okay, let's look at BLNK. Closed up 54% today. That was really nice follow through. This was the big runner from yesterday, and so it did follow through today. That was nice to see. It closed up with RSI at 84 and Fasto at 98, so it's super frothy, and you can see plus DI is starting to hook. Intraday today, it was forming a black candle. It formed that nice big candle yesterday, and it hit this gold line, which is the 100-day simple moving average. It needed to break above that level to head higher. There was a gap up open today, and then the share price had pulled back, and it was forming a black candle intraday, and so that was a cautionary candle. But later in the day, towards the end of the day, it heated up, and it ended up forming this nice white candle. So just keep that in mind that when you're looking at the daily chart, it is all about the close. And it's the black candle on the close after a gap up open above the upper Bollinger Band that signals it's a risk to hold. Since this did form the white candle, that is signaling that it could head higher. Okay, so what's going on now is there's a gap between low of day on the top of this gap up here, the bottom of this red candle, and the top of this red candle is the bottom of the gap. So yesterday's close above the bottom of the gap signaled that it was starting to fill. And so what we're looking for now is a run up to the top of the gap, up here to the to this 200 and 300-day simple moving averages. They're both lined up at the top of the gap level. So if that level gets hit tomorrow, this 850 to 877, 856 to 877 level, 858, the 850 zone, when it gets hit, that could signal the climax of the run. If the candles do work back in the bands, you want to see this 100-day simple moving average at 441 hold. Now, if you look at the 15-minute chart, you can see yesterday this did pull back into the close, and it closed just above that middle Bollinger Band. What we were looking for today was a break above this high close from yesterday, and it did gap up open above that level. Notice how the high close from yesterday turned into support today. So that was a really bullish sign. Was able to stay above that key resistance level from yesterday, and that's exactly what you want to see. You want to see resistance turn into support. It formed a very tight channel, just like AMDA, and then boom, they broke it out and ran it. Same thing. This is a pattern that's happening all across the small caps. So when you see this develop, look for look for these patterns to repeat with other stocks. This looks like the trading firms are really pushing it. When you see a stock, I mean, look over here how BLNK had no volume on the 4th, and then when you see big volume come in and the chart's super bullish, right now that's a signal that it could push higher, and luckily they have been having multi-day runs. So this, we haven't seen this kind of really positive action in the small caps in a long time, and so when things are happening, you've got to strike while the iron's hot. Because at any time this small cap rally could cool down, and we could, these 100-200% gainers in a day could disappear. But while they're happening, you want to take advantage of it. And so right now, that close above high close horizontal resistance, that was the closing price in the first candle of the day. That does signal more upside potential. What you want to see is that 577 level hold to signal that BLNK wants to head higher. Okay, let's look at PRPH. It closed up 55% today. It's got RSI at 85, Fastos at 73. It pulled back from that long upper wick. So check out how this was another. The red flag here is there's this gap down here. This was an island reversal. And then, this one doesn't have the gap. But PRPH here, it did have a gap up open today. Notice how it had super light volume, and then volume came in, and it had the very tight Bollinger Bands. It was trading above all the moving averages. And then today's close above the high close horizontal resistance, which was the top of this white candle here. You can see it had this channel going. Okay, so it had a tight channel going here, and then it broke out above the 2 key levels, above the top of the gap, and then above the high close horizontal resistance. So you want to see it stay above that 320 level, and then above the top of this candle. And so what we need to do when a stock is breaking out like this on the daily chart, and it's trading above all the moving averages, you need to look at the weekly chart to find the next key resistance levels. If the candles do work back in the bands, you want to see EMA4 at 352 hold. If you look at what I had to do here was I wanted to go way out because this is a major breakout for PRPH. I had to use a monthly chart. And this is a 13-year monthly chart, okay? And that's how far back we had to go to find current resistance. I mean, this is now hitting resistance from back here in 2008 and 2009. So this is an incredible move for the stock. It is breaking above the 200-month moving average. That's the red line at 408. You want to see a monthly close above that level. There is still, this month's candle will not set until the closing bell on the last trading day of the month. So a lot can change between now and then. But if it does close above that 200-month moving average, that'll be very bullish. And what you're looking for is a run up to this 650 level. That was the top of this 2009. That was the high close in 2009, and that will be the target if the $4 level turns into support. Okay, let's look at EGY, another big breakout. This is one of the energy sector penny stocks. It closed up 32%. Look how this is just cruising with RSI at 93. I mean, it's super frothy, but it keeps pushing higher. You have Fasto at 87. Look at this multi-day run. It's currently on a 6-day run, and it's just been cruising above EMA4 support. Back here on this candle on the 10th of April, there was a close above EMA4, that's the pink line, after it had traded below for multiple days. And notice how every single one of these candles, besides this candle here that closed just below, all these closes are above the pink line. As long as they keep closing above the pink line, the swing trade signal is to keep riding. Now, there is a red flag in the chart. There's a gap between high of day yesterday and low of day today. So when this finally cools down, what you'll be looking for is this gap to fill and a drop down to 125. A drop to 125 would fill the gap. Notice the big giant volume spike today. So it's unfortunate that they created this gap here, because in Pennyland gaps get filled. If there was no gap here, it would make the chart much stronger. So this sets it up for a potential pullback in the future. Notice the big giant volume spike. So we have to keep an eye out for a climax spike. But the chart is very strong. And if you look here at the EGY weekly chart, you can see it's breaking out big time. It broke out above the high close from January, and so you want to see a weekly close above this 125 zone. Keep in mind this week's candle will not set until the closing bell on Friday. It is hitting this 160 resistance zone from back here in December of 2015. If it can break above that, the next target's going to be the 200-week moving average at 218. So if it gets above 160, look for it to retrace up here, and that would be the next big target. It has a very strong uptrend going. As long as EMA 4 at 123 supports holding on the weekly chart, this signals to keep riding if you're a longer term swing trader. Okay, let's look at IPAS, closed up 30%. Now this has RSI at 58 and FASTO at 81, so this is just heating up. It is on a 3-day run, but it hasn't completely broken out yet like some of the other stocks. It did close above the 50-day simple moving average, and that's why it's made our radar today. That close above 0.356 is bullish. It needs to stay above that level. If it does, what you're looking for is that the 100-day simple moving average at basically 43 to be tested. Back here in the January, the 100-day simple moving average was tested, the gold line. It failed to break and it pulled back. So if you, with everything running so hot in the small caps, there is a chance that this would break above. And if it did get above the 100-day simple moving average, you'd look for a run up to the 200-day simple moving average at 545. Okay, let's look at OGEN. It closed up 27% today. RSI is at 53, FASTO at 61. This is just heating up. This is just heating up. This is not as far along as IPAS. And notice how it closed above the dotted purple line today. That's the middle Bollinger Band, currently at 147. The last close above the middle Bollinger Band was way back here in March on the 19th, right before the downtrend started. So this close above the middle Bollinger Band, which is also the 20-day simple moving average, it is a signal that a possible new uptrend is starting. Notice that PSAR, these green dots, they flip below the candles today. That's a parabolic SAR, stop and reverse, signals the possible start of a new uptrend. Same thing with these bullish crossovers on MACD. Notice how the black line crossed over the purple line on both 8:13 and 5 and 12:26 and 9. That signals the possible start of a new uptrend. Notice there was a big volume spike today. So going forward, what it needs to do is get above this green line. That's the 50-day simple moving average at 176. If it breaks that, the 100-day simple moving average at 197 will be on deck. Look at these the previous breakouts. These ugly black candles all hit that 200-day simple moving average, and the last big run ran all the way up to the 300-day simple moving average. So if this does get cooking and it gets moving like the other stocks, what you're looking for is that 200-day simple moving average to be tested and possibly a run up to that 300-day simple moving average. Okay, let's look at IPCI. Closed up 20% today. This chart is just heating up as well. RSI is only at 40, FASTO at 37. So this is, each one of these is a little bit further, is starting, IPAS was above the 50-day simple moving average and above the middle Bollinger Band. OGN is above the middle Bollinger Band but below the 50-day simple moving average. And then even further behind is IPCI, which has yet to get above the middle Bollinger Band at 46. But today there was a bullish close above EMA's 4, 8, and 13, and so if it can stay above EMA 13 at 40, that would be bullish. It needs to get above that middle Bollinger Band at 46. You can see the last time it got above that level, it failed to hold and it pulled back. What you're looking for is a break above 46 and then a run up to this 50-day simple moving average at 55. Notice that giant volume spike today. There's a PSAR bull flip. You've got the MACD bull cross in the 8, 13, and 5. The chart's heating up. It just has to stay above 40 and then break 46. Okay, let's look at EYES. Closed up 18% today. RSI at 56. FASTO's now at 90. As you can see here on ADX, you've got plus DI crossed over minus DI and ADX, so that's a signal the chart is heating up. You can see down here there was a volume spike today, so that was a nice pickup in volume, the largest volume day since back here in March. And there was also a bullish close today above the middle Bollinger Band at 166 and that 50-day simple moving average at 176. If it can stay above both levels, that would be bullish. There was also a close above the descending resistance line. As you can see here, there's a descending triangle pattern. You have a descending resistance and horizontal support. Notice the double bottom here, and so it closed above the red line, and that does signal upside potential. It's hitting right at that 100-day simple moving average, the gold line at 182. If you see it trade above 182 tomorrow, that should signal it wants to head higher and look for a run up to $2. That's the recent high close. That's the high close in March. It'll need to break above that $2 level to run up here to this 230 high close from back in February. Okay, now let's look at HEAR. Okay, yeah, this is a stock that's been on a really nice uptrend. Look at this uptrend. I mean, it's just cruising. When a stock is riding the pink line like this, the pink line on all my charts is EMA4, the signal is just to keep riding. I mean, this is just a signal that it's a very strong uptrend. Once there's a close below, the EMA4 currently at 704, that will be a bearish change in trend, and that will signal a possible consolidation. You might see EMA8 tested, possibly EMA13. The last time that happened was back here. You can see that this candle closed below EMA4. It hit the 300-day simple moving average and EMA13 and bounced. This bounced off at EMA13 as well. So once this finally pulls back, you know, you're looking for a bounce off that EMA8, EMA13 zone. If those were to break, then that middle Bollinger Band would be on deck. It has to hold the middle Bollinger Band to keep the uptrend going. Notice how it has an increasing volume pattern as the share price is heading higher. Volume's picking up as it's heading higher. That's pretty impressive. Now, in order to find resistance, we need to look at the weekly chart, and so if you can see here, it's hitting the key level, the 200-week moving average at 772. This could prove to be tough to break. Notice it's also the high close resistance from 2016. From back here in November 2016, that was the highest close in 2016, and it's hitting that level right now. So it needs to get a weekly close above this white candle and above that 200-day simple moving average at 772, and that would signal more upside. You want to see a break above 850. You know, it's just all about that, you know, for this week. This week's candle won't set until the closing bell on Friday, so a lot can change between now and then. A close above signals more upside. The trend still, you know, the uptrend's still happening. If it fails to close above that level, it could consolidate. What you want to see is EMA4 at 613 hold. Notice how all these candles since pretty much back here on these little candles back in February, March, they closed above the pink line, and every single one of these candles is closing above the pink line. As long as that level is holding, the longer term swing trade signal is to just keep riding. This has been a 400% gain since down here, or even more. And so sometimes it's better just to keep riding and not worry about the day-to-day fluctuations as long as the chart remains strong, if you're a longer-term swing trader. Okay, let's look at CYTX. Closed up 13.5% today. Keep an eye on this one. It's in this nasty downtrending channel. It's hitting that middle Bollinger Band currently at 275. So if you see it trading above 275 tomorrow, that would be bullish. And then what you want to see is a break above this descending resistance line. If you can get above 2.8, that green line will be on deck. That's the 50-day simple moving average at basically 30 cents, and then you have the 100-day simple moving average at 32 as the two big levels. As you can see back here on that previous run, back in January and started in December, it got above the moving averages, and that's when it really took off. So this chart isn't ready to go yet. The stock isn't ready to go yet, but it looks like it could be setting up, so just keep an eye on it. Okay, let's look at TIK. This closed up 27%. Now notice it only traded 130,000 shares. It's a thinly traded stock. What makes it interesting is it did have this big volume spike back here in December, so it has had some volume in the past. So keep an eye on it and be in my radar today, because it closed above the 100 and 200-day simple moving averages. If it stays above 290 here, that's the red line. That's the first close above the 200-day simple moving average in 2018, and you have to go way off this chart to find the last close above that level. When that happens, many times that's the clue that it wants to head higher. So we'll see if that follows through. And what you're looking for now is a break above that 300-day simple moving average at 338. It's going to need to close above that level to head higher. Notice these wicks here, you know, ran above that level, so maybe this thing will get cooking. It's going to take volume, hold 290, and then break above 338. You know, volume should be the clue that it wants to push higher. Let's look at DHX. Closed up 18.5% today. RSI at 52. Fasto at 58. You've got a bullish crossover starting on 80X. So this is on this had, okay, so what made this one interesting, it had the big pullback, and then you have the big giant volume spike down at the bottom. So they definitely loaded down here, and then now they're trying to push it higher. Yesterday's close above EMA4 signaled it was heating up, and then today there was nice follow through. So congrats everybody. You know, I think pretty much all these charts I've charted in the chat today. I chatted yesterday. I posted in the chat yesterday. I've been posting these plays, and so yeah, if you want to get these plays like in real time and not just catch it like after all the action happens. You got to come check out the chat. So the middle Bollinger Band at 159 is the key level to hold. If it holds, a new uptrend could begin. Now you want to see a break above the 50-day simple moving average at 167, and then above this 100-day simple moving average at 175. Those are the two key levels to break above. Okay, and finally let's finish with DAC. This goes up 13%. I mean, it caught my eye today in the chat just because it closed above the 50-day simple moving average. When that happens, it makes my radar. I like that type of setup. Back here in December and January, it failed to hold that level and pulled back. This is our clue that they could try to run this. Now, it still has super light volume, but if you look back here in this July run, way over here on the left of the screen, you can see there was this big run and there was big volume behind it. So volume could come in. So keep an eye for a volume spike and a move above the 100-day simple moving average at 131. If that happens, then we'll be looking for a run up to that 200-day simple moving average at 143. Notice how that's been the top of these previous runs. If it breaks above that 300-day simple moving average at 152 will be on deck. Okay, lots of hot penny stocks out there. It's freaking take advantage of it and make some money. Come in the chat. I'll post the link at the end of the video. Thank you.